Hey guys, I was just looking at the market and wanted to give you some commentary on what's happening. It's Friday, 12:54 p.m. So the market is, still open, still going. So before I said, it was an inside bar and we said that we weren't going to get in the market today, right? But because of the length of this wick, we can see that a nice move happened, right? So I want to just go into detail around, what that looked like. So this is the daily chart. Let's see. Let's go down to the 1 hour chart. Okay. You can see this long wick happen in the morning at open around 9:30. So I want to show you how you could have made money on this. So we're going to go down to the 30-minute chart. And you can see that it opened up pretty strong and then quick reversal back to the downside with a low of 362.17. So let's mark this level. All right, let's go down to the 15-minute. And you can see now this is how we, go into a trade. We start with a bigger time frame, go down to a smaller time frame. We can see right here we have a 2 up, 2 up, 2 down. So at the low of this 2 down candle, this would be our entry. So we'll say 2 bear rev 15-minute and then entry. Our stop would be at the top of the candle that we're actually getting in on. So this would be our stop. So this is our candle where we understand it's a big doji, right? We understand that if we break below this, this could be an entry. This is considered our trigger candle. So your stop is always based on your trigger candle, the candle that you actually enter your trade on, right? All right, so this is a 15-minute chart. So we have 1 candle, 2 candle, 3. Things get kind of crazy right here. I probably would have took an exit here because of how long this wick was. Something to keep in mind is that up here you can see the time. It says 12:56. So if we know that 10:37, so 15-minute intervals, 10:30, 10:45, 11 o'clock, right? If we look at the 3-minute chart to get just some more granular detail, this is what a more accurate entry and exit looks like. So you can see our 15-minute entry with a 2-2 bear reversal actually was the support on the 3-minute, right? So remember, support and resistance. Price went up, price came down. This was the lowest point. Price went up. As soon as it broke through that floor, we were into a downtrend. See that? So this is how your higher time frames act as support resistance for your lower time frames. A more precise entry could have been a 2 up, 2 up, 2 down reversal here. So we'll say 2 bear rev 3-minute entry. And then our stop will be at the top of the trigger candle here. So at the very top here, this will be our stop. And what that means is that if our trade thought process, or if our trade were to go against us, and instead of it going down, it becomes maybe an outside bar and goes back up, we will want to get out of our trade immediately here. We want to have really, really tight stops. So this is our 3-minute stop. So let's put 3-minute stop. And then our 3-minute entry. Then we have our 15-minute stop and our 15-minute entry. And the thing I want to point out right here is that you can see you're only risking, about 40, 50 cents here on this 3 minute move versus the 15-minute move where you have the entry as that 367 and your stop is at 368. So it's about, 80 to 90 cents. So not that big of a difference. The 15-minute entry and stop would be a safer play. It's more conservative. The 3 minute is more riskier, more aggressive, but you can see you can get into your trade earlier and catch the bigger move all the way to the downside. So I'm going to remove this time level. All right, so once we hit down here, this red line represents the lowest point from yesterday. So as soon as we ripped through this point here, we saw a little bit of ranging, we saw an outside bar happen, and then we immediately saw a reversal to the downside. So as soon as we saw this candle here, and then we saw it go down, I would have tried to take my exit because you can see here, we had a low at 362.63. Price went back up. The minute we hit that low again, 362.63, I would have taken my exit. It would have been really, really hard to get an exit here. Not too hard, but it just takes experience to be able to get out at this exact level. So we'll just say right here is our exit. So I'll just make this white. So now we know we could have gotten in at 368.79. So let's put a little text note. So our entry was 368.79. Our exit was 362.63. And our stop loss was at 369.13. So and this is based on your 3 minute time frame. So now the question is, how much money could we have made on a it's about $5 to $6 move? So we'll pull up our option contract. So we'll say period SPY 220617 put. Today's the 17th, so we'll put between 368 and the low of the day of 364. I would have gone with about 366, just price point wise, something that's affordable for me, right? So 366. Let's see. All right. So I want to take this stuff off my chart. I don't like the lines. So get that out of here. All right, so it's about here. Let's activate. This is about our entry. So we're looking at about 119, 120 for our entry earlier today at 9:58 or so. This is also the 3-minute chart for the option contract. 17th of June, put 366, right? So I try to get contracts that are in the space of, $20, which is like 0.20 to about 1.25. I don't like to spend more than $125 on a position because that's outside of the space that I like to trade in. If you think about it in terms of like 10 contracts, 125 times 10, that's about $12.50. So I don't want to spend more than that, on the position. I'm only at a space of trading 10 contracts at a time. But we're going to practice doing one at a time just for, to get comfortable with the process. But you see here, we have a 2 down, 2 down, 2 up reversal. So 2 down, 2 down, 2 up, right? So as soon as we break the high of this candle, that's our entry, right? This lines up really well with the other chart. Let's see if I can. All right, I'll do something different in a second. So our entries are 119. You can see we had a huge move up to $6.64. That would have been our ideal entry. But even in 3 minutes, look how much this candle moved. So it would have been pretty tough to kind of get out right there. Price comes down a bit, right? This candle things got really spooky. We went down to 0.22. That would have definitely made me sick for a second. And then we come back up. And right here at this point, 4.9, we exit. Now, how would we have known to get out and exit? So you always want to use previous price information. So you can see at this level right here, this was the highest point on this option contract. Say about right there. And then we have another level around here. And I'm just going to get the wick. You see that wick right there on this white candle? This wick right here. So as soon as we entered into that space again, because we already came through once, as soon as we hit this space right here, I would exit it completely. Now, that probably wouldn't have been exactly at 4.9. It might have been closer to, oops, that's not right. So you're looking at 4.78. So how much money would we have made if we put $500 into this trade? So yeah, 4.78 minus 1. Let's just say 1.2. So 3.58, right? That's your profit on one contract. If you were to get 5 contracts, you multiply this times 5. And then you multiply this times 100, because when you get one contract, it equals 100 shares. So you're looking at a profit of $17.90 if you got 5 contracts. So your investment would have been 1.2 times 5. So your investment would have been $600, and you would have made $17.90 profit off of $600. And so, that's pretty cool. And then, like, what is that percentage? So I use this one tool, Fibonacci retracement. So we'll say 1.2. 1.2 times 2 is 2.4. So we'll go up to about 2.4. And then we'll come down to 1.2. And we can see, actually, I should have drag this out a bit more. So let's just extend. So we want to make sure 2.4 is lined up on the, here we go. So if you want to just not play with moving it around, you can edit the properties. 100% is 2.4. 0% is 1.2. This means 100% profit between these two numbers. We click OK. And you can see I set up my coefficient. So negative 25%, 0%, 15%, 25%, 50%, 75%, 100%, 200%, 300%, 400%, 500%. And you just go in and you just change the numbers. This is all I did. You just change the numbers. Anyway, you click Save as Default, and you click OK. So now when we look at our entry, we can see that if our entry was at 1.2, which is kind of hard to see because of the candle right here, but we know that we only really wanted to risk 25%, which would have put us at about 0.90, right? We hit 100% at 2.4. We hit 200% at 3.59. And we hit 300% here at 4.78. So this is also a good way to calculate how much your percentage is. So let's do something different. I'm going to show you something else. Let's do it like this. All right, let's unlink this side. So on this side, we're going to put SPY. This is your 3-minute chart, and then this is the option contract on the left-hand side, right? So we're going to go down to the 3-minute time frame. All right, so this is our entry on the 3-minute, right? So we're entering right at the start of this candle at 9:57. We're exiting. We see our first sign to exit right here at 10:37, and then our last sign to exit here at 10:50, 10:49. Now check this out. Your entry date on your option contract at 9:58 lines up pretty well with the 2-2 reversal happening on the 3-minute. So you will ideally be looking at 2 charts at one time, right? So 2-2 reversal to the downside happening on SPY, which means we want to be in a put. Our option contract is a put. It's the 366 put. And we can see we have a 2-2 bull reversal happening on this side, meaning that the price is going to go up, which is what we want because we want to make money, right? So I'm just showing you this to say that look at the time frames and look at the same setup: 2-2 bull reversal, 2-2 bear reversal, right? So as I'm moving, you can see the cursor on this left side moving as well. So I guess this momentum right here caused this candle to jump really high on the left side. You see the cursor? This movement right here made the candle jump to 664. That's insane. Still moved to the downside. Check this out. This candle here, this inside bar, this 3-minute inside bar, caused the price on the option contract side to go from $3 down to a low of 22. This is wild. We continue to go down. Right here in this moment, it would have been a 1, a 2 down, a 2 up, but the bulls didn't have enough momentum to continue the strength, and so it ended up being a 2-up candle that became bearish, right? So then the next candle, a lot of momentum, right? We watch this low here. We make a note of that. We go inside, we go outside, we come back down to that same level, we get out immediately. You see that? You can see also that 10:49 a.m. lines up really well over here with 10:49 a.m. Yeah, so just wanted to show that to you guys. This was a trade that I just saw a few minutes ago. I didn't take any trades this week. Really busy week, but we'll get into it some more next week.